almost everybody failed.
Babe, I beg, borrow me cornflakes and sugar and sardine.
And the last thing I want to worry about is making payments. That's why I use QuickTeller for buying airtime, paying school bills, and sending money.
Making payments is one less thing to worry about with QuickTeller. Visit QuickTeller.com and download the mobile app to get started. QuickTeller, everyday payments made easy.
You know, as a business executive, there are so many things to worry about.
The presentation is tomorrow, and we have to work late tonight.
Madam, what I do? The radiator has spoiled too, and it has spoiled the compressor and carburetor.
When will you get married? You're not getting any younger.
Babe, are you adding weight? And the last thing I want to be worrying about is making payments. That's why I use QuickTeller for paying bills, sending money, buying airtime, and more.
Making payments is one less thing to worry about with QuickTeller. Visit QuickTeller.com and download the mobile app to get started. QuickTeller, everyday payments made easy.
With critical focus on the Nigerian...
Lagos, good morning again. Smooth 98.1 Smooth Breakfast Show. It's time for Business Express. My guest today, his first name begins with an A. His last name begins with an A. The company he works for begins with an A. Ayomide. Ayorinde. See, I get it mixed up. Ayorinde Akindele of Afri Invest. Good morning, sir. Welcome to the studio.
Thank you.
All right. So, Lagos, real quick, we're going to jump right into the market activity yesterday. All share index bounced back after the president made his announcement, which may or may not have affected the market, but it was up yesterday, 0.17%, closed at 40,499 points. Market cap was up by 0.17% to 14.6 trillion naira. 16 gainers, 26 losers. Japol. I'm not even buying it with Japol. We don't care about Japol anymore, right? Japol was the top gainer. I don't even know what's going on, but Japol was the top gainer yesterday, up by 8% to 53 kobo. Wema Bank was the top loser, down by 4.9% to 77 kobo, and we're at 362 to the dollar. So, Ayo, look, yesterday, I don't know whether we had new people who just tuned in, but when they heard that the stock market dropped because of Buhari, they were just jumping all over me, saying, yes, this is why it happened. And I'm trying to explain to them, no. The market has been, it's been bearish for a little while. Yeah. So I don't know whether we got new listeners yesterday, but for those who are listening, Buhari did not cause the market to drop the other day. Okay, so please let's go over the market activity, what we've seen.
Basically, we've been, even for the past over a month now, we've seen market correct. So not really because of what Buhari announcing that he wants to contest the 2018 elections.
2019,
yes, right. 2019 elections. So basically, really, okay, there may be some fears on the part of political uncertainty, as this declaration definitely kickstarts the beginning of the election cycle, although we might not begin to see that fully until when we begin to see INEC announce campaign rules and the likes. But really, the equities market has actually been on the downtrend. Even the financial market generally, in the fixed income market, yields too have been declining. So really, it's not been a rosy period for the equities market. Looking down from March till 1st of March till now, market has lost over 5%.
Okay.
And that's even because there was some sort of bullish run at the beginning of March. If we exclude that period, market would have been down about 7%. So really, in March to market lost on 12 trading days of last month out of about less than 20 trading days.
Right.
This month, out of the 6 trading days we've had, market has lost on 4 of those trading days. So really, it's not been very much a rosy performance. Largely, the most disappointing sectors really have been the sectors that we consider very solid. The banking index has been down about 3.7% from the 1st of April till date, just till yesterday, so lost about 3.7%. The industrials too have lost 3.9%. The insurance sector has been the lone gainer, 0.7%. So really, largely what we can attribute this the losses to, number one, we can look at the some of the earnings results by some companies have been underwhelming in terms of not necessarily bad, but not really meeting investors' expectation, particularly in the banking space. We had some companies not really meet up with the expectation that with what analysts and investors expected from them. Going to industrials, we had likes of LaFarge declared the loss on Monday. So these has formed drags on majority of these stocks. So we've also seen all these stocks reprice back to normality because of we are seeing the previous rallies. We have seen pricing in the expected return. So it's just normal for us to see that retreat. You've seen the exit of foreign portfolio investors too. Their participation declined in February to about 39.25% from 42% in January. Their inflows declined 51% in February. We're expecting the March figures from the NSC very soon. So really, those are the things that has really contributed to the downtrend. So, but going forward, we expect the negative performance to turn. We expect the market to turn around. Basically, the attractive entry opportunities for investors right now. Attractive entry opportunities. We have GT at 43 naira. We have UB at 1105. Right. So a lot of stocks are at attractive prices. On the technical side, the 14-day RSI is at about 3.9%. The Ocean Index has been trading below its 50 and 100-day moving average. So I think what the market needs right now is just some news to spark investor sentiments to begin to buy to improve buying interest, and that's where we really need the Q1 results to be very, very impressive, and also Q2 results to be impressive, because when we begin to get after June, after half year, we begin to see political uncertainty kicking, which could affect the market. So whatever will be done to the market needs to be done between now and June, and we're counting on the earnings release for half year 2018.
We're counting on earnings. We're counting on the performance of the company. So speaking of which, we touched on LaFarge just a bit yesterday. Can we go into a little more detail? You just mentioned them again. About their full year performance, because it wasn't good.
Yes.
Right. Yes. So what are we seeing here with LaFarge?
Okay. LaFarge declared a loss of about 34.6 billion.
34 billion naira.
But really, looking at other on the negative performance largely is because of I think they suffered from a lot of cost pressures. The revenue grew about 36.9%, much more than Dangote Cement. Dangote Cement grew 31%. Theirs grew 36.9%. But we saw some cost pressures. Their cost of sales grew about 30.7%. Their OPEX grew about 61%. Finance costs also grew about 18%, largely because of their FX denominated loans that they had to book some FX losses on. Their debt to equity ratio is about 183%.
183% debt to equity.
So that's quite massive compared to Danksem of 49.6%. CCNN, and that's a smaller in terms of volumes and capacity. 5.4% for their debt to equity. So we saw pressures on their finance cost part. Danksem finance cost was down. They were able to reduce finance cost by about 973%. But for LaFarge, it went up by 18.5%. OPEX grew about 61.1%, largely due to a component of the OPEX was other expenses, which grew over 500%.
Wow.
So then they also
Okay.
booked impairments on some of the projects that they were doing. We saw them book impairments of about 19.2 billion in Q4, which was one of the major drags, because Q1, Q2 results were still, posting some, sending some positive signals. But the 19.2 billion booking of impairments largely on the projects they're doing at the Ashakas. The Ashakas Cement, they acquired Ashakas Cement some years ago. They also acquired Unisem last year. So some of the projects that were ongoing there, they had to book impairments on some of them because of discontinuing those projects. So those are some of the major effects, some of the major drags on the performance. So sales, the top line was impressive, but the cost pressures have continued to affect LaFarge. Like if you look at their gross margin from 2012, it has been on a steady decline. In 2012, it was around 37.1%. By 2017, now it's 17%.
Wow.
So their gross margin has been on a constant decline due to a lot of cost pressures. But we see that the drags on their performance last year were mainly some sort of one-off cost, like the impairment charges of 19 billion that was booked. The FX losses, they did the right issue, which we expect to take full effect this year. So we would see then the debt to equity ratio should come down. Then they should be able to settle off some of their FX denominated loans and other loans by reducing, deleveraging their books. So we may see in terms of finance costs, hopefully some decline, and then we also expect that the impairment charges that were booked last year will not be seeing that again this year, because it was just a one-off expense. And then the CEO also said that they're targeting an EBITDA margin of 35% for 2018.
That's not, you don't think that's too bullish?
Well, Danksem was about 40%.
Okay.
So it's something that it's possible for them to achieve. Their revenue levels are quite good. So if they're able to bring down costs, we might see improvement in their performance in 2018. So basically, that's what going forward we still expect that LaFarge will do. But in terms of recommendation, the stock is still under review. So when the review is done, we would release our recommendation, either buy, hold, or sell. But the outlook is still positive, because we expect them to continue their revenue levels. We expect them to deleverage through the right issue that they have done. COGS too should come down, cost of sales too should come down, and then finance costs should come down. Then they also plan to launch some energy optimization plan in terms of reducing cost of energy along all their plants across the country. And then their South African operations too is expected to improve, because it was shut down for a large part of last year. Some of their plants in South Africa, major plants in South Africa, was shut down, and do picked up later towards the end of the year. So we expect a rebound on that side too. So altogether, we expect positive performance for LaFarge.
All right. In-depth analysis of LaFarge performance. Let's see what's up here. 0809 444 0981. AY says, are we sure this is not the efficient market theory in play? It's probably being the market, stock market, probably priced in Buhari's intention from March. Let's see now. Have another message here from Dawuzi. Tuned in late. Wanted to ask about, what do you think about NEM insurance? Held it for months and has appreciated significantly. A buy, sell, or hold. You mentioned that the insurance sector was pretty much the only sector that has appreciated so far. And so NEM insurance is topped the gainers chart a couple times. I would say hold, or what do you think?
I think really there's no I would say for NEM, we give it a hold, because now we look at the dividend yields on insurance stocks, because we take a look at the price of most of these stocks. They are 2 naira, some 50, 30 something kobo stocks, and so when they declare dividends, the dividend yields end up translating to double digits. So like 2016, I had a lot of double digits dividend yield. In 2017, we didn't have so much, but going to 2018, some of these lowly priced stocks, if they declare strong dividends on account of the fact that some of the price floor that was brought in by the exchange would make so many of the insurance companies sit up now and see how they can improve operations. Otherwise, they're going towards falling further. So we might see them try and improve operations this year to at least declare some reasonable dividends. So I think you can still hold.
That was hold on to NEM insurance. And of course, if you need more information, we want you to do your due diligence before taking any advice here. Afri Invest is here. You can contact our good man Ayo and other his colleagues at Afri Invest. They'll give you all the advice that you want to get. That is actually all the time we have. For we wanted to go into the this rumor about the exchange price. We'll get into that tomorrow with the horsemen. Ayorinde, Akindele of Afri Invest, thank you so much for joining us today on BusinessExpress, and appreciate your messages, guys. Coming up next is Frankly Speaking with Muyiwa Afolabi. Keep it locked to Smooth 98.1.
Business Express on Smooth 98.1.